For thousands of years, humanity believed one thing would last forever: wealth. Gold empires, mighty banks, powerful currencies. Yet history tells a brutal story. The greatest fortunes are often the first to collapse. In the 14th century, the richest banking family in Europe wasn't a government. It was the Bardi and Peruzzi banks of Florence. They funded kings, wars, and entire nations. Then one decision destroyed them, lending massive sums to England's King Edward III. When the king defaulted, both banks collapsed. Florence entered an economic depression that lasted decades. The lesson was simple but ignored for centuries. When power and money mix, loss follows. Fast forward to 1720. Britain believed it had discovered a miracle solution to debt: the South Sea Company. Shares exploded in value. Ordinary people sold homes, businesses, even family heirlooms to buy in. Then the truth emerged. There were no real profits. The bubble burst overnight. The result? Thousands ruined. Pensions wiped out. Trust in markets shattered. History had whispered a warning. If something promises effortless wealth, the cost will come later. In 1929, the world ignored every warning sign. The US stock market soared beyond reality. People bought shares with borrowed money, convinced prices could only rise. When the crash came, it erased billions of dollars in weeks. But the real loss wasn't money. It was time, opportunity, and stability. The Great Depression followed. Jobs vanished, banks failed, families lost everything. An entire generation learned to fear risk. Then came 2008, different century. Same mistake. Banks created complex financial products no one fully understood. Housing prices were believed to be unstoppable. When reality returned, global markets collapsed. Once again, governments rescued institutions while ordinary people paid the price through unemployment, inflation, and lost futures. Every financial disaster shares one pattern: short-term gain traded for long-term loss. And now we stand at the edge of the future. Artificial intelligence trades stocks in milliseconds. Digital currencies rise and fall in hours. Nations print money faster than ever before. Debt has become invisible but not harmless. The greatest financial loss of the future may not be a market crash. It may be trust in money. Trust in banks, trust that effort equals reward. History doesn't repeat itself because we forget facts. It repeats because we ignore lessons. Empires fell when currency collapsed. Societies broke when wealth concentrated too fast. And every generation believed, this time is different. It never is. The future won't punish us for innovation. It will punish us for arrogance. The real question isn't whether another financial collapse will happen. History already answered that. The question is, who will pay the price this time?